So this is how I took my buys on NASDAQ up there, as you can see. So the first thing I saw was we had price running these lows, inducing sellers to come in. And the next thing I noted was we have got a build up there. So this is a build up. Why? Because this high is reacting to this high. It's respecting this high. And for me, that means we are building liquidity up there and we'll need this liquidity to get taken out. So all in all, I need to see these highs get taken out, because this is a build up of liquidity, and that should mean we need to see all-time highs. So I'll be looking at these highs getting taken out. So look at this. To the left, we have got a build up of liquidity, and this price reacted to all this liquidity and came down there, induced sellers with a sweep here. Look at we swept there. This was more like a break of structure. So look at this. This is a liquidity sweep. So after this sweep, I should now see reasons for why price should come and run these highs. Right. Next thing, I went to my 4-hour time frame, and on my 4-hour time frame, this is what I saw. We had obviously a break of structure to the downside, inducing sellers, formed a high. So this smart money trap here is what I call this is a build up of liquidity. Why is it a build up? Because look, this high is respecting this high, building liquidity up there. And then I came and dotted out by liquidity levels there, and price induced lower, running these lows to the left. So the next thing I did was I came to my 60 minutes time frame. Okay, so look at this. After price induced low, run liquidity to the left and pushed high. So this push high is where I'll be expecting price to build me liquidity. So price came into this supply level here, reacted to the supply level there, building liquidity up there. So this build up has got to get taken out. I need to see price run this build up. So after building this liquidity there, pushed lower, and I now went to my 15 minutes time frame, and this is where I got my entry from. So price came to this smart money trap, reacted to it, built liquidity up there, and the next thing I noted was we had liquidity up here. We have got liquidity there, and all this liquidity had to get taken out. So look at this. This is a build up of liquidity. How is it? Because we had price go high, come back to these lows, react to these lows, respect them, push high, and it kept doing that, meaning they were building liquidity that needed to get taken out down here. And after the liquidity was built, price came into the smart money trap here, pushed lower, ran all those lows, and after running those lows, I took my entry, my first entry rather, at this inducement low there, stop loss below the liquidity block, and I was targeting this here. So look at my second entry was at this liquidity block. And to top things off, right, if you looked at time and price were aligning. So if you take a look at this, let me just put this here. This was stock open. That's like 9:30 EST. Stock open is when I take my trades. I take my trades right after stock open. That's in New York session. So stock open came in, price pushed low, and came into my liquidity block. That was my second entry. So the first entry was just at this inducement low, and I was targeting this point here, and my second entry was at the liquidity block down here, stop loss below the liquidity block, and I targeted these highs. So my targets were here because this is a smart money trap, and we were obviously heading into the weekend because this was like Friday. So I don't really like to hold trades over the weekend. So price came up here, pushed, ran my smart money trap, and that's how I hit profit. So that's why I was targeting this point there. So these were the two trades I took on Friday.